Que pedo, que onda, que pasa, que tal? How's everybody doing this afternoon? I want to get right back into it. I didn't get to do the closing arguments at the bell this afternoon. Got a little wrapped up, did a few things around the house, little gym time, a little bit of Tarkov time, if you guys follow me. And, it was kind of a slow day for, as far as the markets goes, concerned with AMC. I do, however, want to take this time, kind of do a chart wrap up and take a look at some other areas. In some other positions that we need to take a look at. Just see where we wrapped up on the day. I don't worry too much about the day to day, so I don't think much has changed from where we stood earlier. And then I kind of kept up with it throughout the day. However, I do have some very interesting articles that I do want to go over, and we'll follow that as well. So I'll just get right to the charts, and we'll go straight over here and take a look. All right, first up, we got AMC here. Looks like we are currently sitting about 10.35. Looks like we're up about 11 cents on the day today. Not bad. It's a green day, right? 1% up, so I'll take it when we can get it. I'd rather see green than red, and that's fine with me. Didn't look like we saw a lot of volume. We did see quite a bit of volume here and here. I don't know what this was here because it doesn't look like it changed very much. Looks like that was about 332,000. So really not that much volume just compared to the rest of the day. These are 1 minute candles here, 30, 40, 50, 60, 70, somewhere in there, right? So under 100,000 for most of these 1 minute candles. Going back into the to zoom out, and we see over here, so probably about the same there. 431,000. So looks like a lot of volume. Actually wasn't that much volume compared to where we normally are with this stock. So we did see a little bit of a climb up. Actually, we'll just start from the get-go, right? If you guys follow along, we saw this morning where we got up to about 1071 ish, somewhere around there, 1067, 1071, somewhere around that, almost 1070, right? So we hit that. We kind of bounced off really quickly here within about a half hour and shot all the way back down to a low down here of about 1014, somewhere around there. And then we just kind of trended back upwards, and then, after that, I guess, a little bit more going on than what I thought there was. I guess when the afternoon I kept checking, I just kept seeing like 1025, 1035, somewhere around the 1030 mark. So, and then now into the aftermarket here, we currently set just kind of trading sideways, right? So, not too much going on here. We're up 1% on the day, 11 cents. That's fine. I would have liked to have seen us push above 1050 and stay above 1050. I just think that that's a mental mark for a lot of people. And that can help kind of drive this thing up, when you start seeing, oh man, okay, they're at 1050, all right, this thing's going to get to 11, and then once you see us pass 11 or 12, you'll see like what happened at when we went to 14, right? A lot of people start jumping on the bandwagon because they see this thing going up, and they don't want to, they get FOMO, they get fear of missing out, and they just hop on. So we'll pull up the flex grid here for our GME viewers, and GME traded slightly similar, a little bit of up and down to start the morning. And then just kind of trade a little sideways, not so flat, but currently sitting at about 181.30, which is up about 30 cents from where they closed at on Friday. I would imagine that's where this is at here. So, not bad, not a bad position for either stock here. So I'm not mad at it. I like it. Yeah, it is what it is, right? We'll keep on rocking till tomorrow. Every day's a new battle, so. This one, we're all right. We're just loading up for the next one. So we are down in our call option here. Not too worried about that. That's just a little bit of money that more so like gambling to me than it is investing, right? So our AMTX still down, actually down a couple bucks on the day. Not worried there as we reached all-time highs a couple days ago, and it's trending upward. So we're just in the midst of a pullback here. It's a biodiesel and alternative fuels company, so I think that we will see the price of this just keep trending upwards throughout the next few months. And only 2 positions long, so this is just something I was testing out, just playing around with, as you guys know if you watch the channel. Same thing with Rocket. Rocket, we're a bag holder. Sins is a long-term play. Not much going on there. Down, quarter today. Rocket down 11 cents today after being actually up a little bit early this morning. We actually take a look here at Rocket. And you can see we started out the day really strong with Rocket, hit a high of 27.44. Then we just kind of really sold off after that. So I'm not going to call it a pump and dump, but, it kind of looks like that, right? It's not really, though. So since kind of where we are, just kind of downward and trading sideways, cool with that. If it gets below $2, I'm gonna buy some more. So not that worried. That's a really long-term play. Harley Davidson has been a long-term play. Been in the portfolio for about 3 years now. So got my limit order set here. Not too worried about it. I got it set at what is that, $42? So is what it is. Just kind of wrapping up AMC. We'll take a look at SPY as a matter of fact, just to see how the market did as a whole here. And actually, so this is good news, right? That at least from the beginning, we saw the same thing, right? A little bit of a pump and then a sell-off shortly after market open within the first hour. So we saw that with AMC. Nice little pump, sell-off. So we are trading alongside the market, which is something that we typically have not done. So we're kind of breaking apart from that meme stock label. However, with the short squeeze potential that we have, and we're going to kind of get into that here in just a few moments. We're kind of doing our own thing still, but we're kind of following the overall trend of the market, and I like to see that. So, not too bad. A little bit up on the day from where we started out, actually where we closed. So, overall market did okay today. And what I really want to get into, right? So, where I would think we end up tomorrow, I think we probably trade around the same, a little bit up, a little bit down. I just don't really see too much news other than the fact that Kong, I want to say it was 180 million opening box office numbers, and that's not including the U.S. if I am correct. Godzilla vs. Kong snags 121.8 million in global box office ahead of U.S. release. So it's an article on TD Ameritrade from Benzinga. You guys can just Google Benzinga, Godzilla vs. Kong, or Benzinga AMC. You'll find all kinds of stuff here. So learning new stuff every day. It looks like the film, a production of AT&T subsidiary Warner Bros. So, I guess Warner Bros. Time Warner Cable. Okay, so AMC, all right. Or AT&T, right? So it's another position we have here that we talked about, right? Up, doing pretty good on AT&T for the day. Actually, for the last few weeks here. Let me get rid of that. Go to Active Trader. You can see we're up just a little bit in our position long here. Up about $31 on the day, so not bad. Up $174 net profit on AT&T, but this is a long-term play. If you watch the channel, because of the dividend at 7.23% yield. So strong dividend. Anyhow, like I said, this is elsewhere in the world. It gives some numbers here. I don't want to get too much. I want to kind of keep this video really short, just make it less than 10 minutes if possible. And we've got a lot of other things to go through. But however, there is a nice little article here on Godzilla vs. Kong. And that's snagged 121.8 million in global box office ahead of U.S. release. So we should see a nice little bump up with some good news of that and AMC theaters being open. All right, let's get into the meat and potato. Actually, that probably was the meat and potatoes. But let's get into some other things here. So taking a look at Fintel, not our favorite. You know what? I will probably stop showing Fintel. I just don't want to get anybody's hopes down when they see these numbers here. Short volume ratio actually going down, although I don't know, how much this is accurate. Short shares availability went up 3.3 million, and then the short borrow fee rate went up to 2.06. However, we know that hedge funds understand we are using those numbers, and they're wise to it. So they're doing backdoor trading, stuff like that on the OTC and dark pool trading, DPT. So I'm sure you guys are all aware of that, and maybe we'll make a video on it. There's a ton of other videos out there. Andrew Mo Money, Matt Kors, Trace Trades. Ton of people made videos on it, so don't really feel the need to tag it unless I see something that they did not follow. However, I just kind of typed in what's going on with AMC and looked through some articles here, and I want to talk about some of this stuff now. This is Yahoo Finance, and it's almost kind of like a Reddit style page here with just reactions of where they currently sit right for the day. And it's actually kind of interesting because in here they have a lot of good information just off the first couple of reactions here. So the first one is about the AMC exec selling the portion of the shares. If you guys have seen that article, it's on TD Ameritrade, and we talked about it this morning on the stream. And it's about 4 executives from AMC, also either 50% or less of their position in AMC between 1st of March and now, right? essentially is what that equates to. And to me, it seems like they left a lot of money on the table. So I don't know why that they did it when we hit $14, but they all sold for around the 10, or I think some of them may even got up to $12. But they left some money on the table, and they could have still held. And I don't know why they did it, but people that are working and insiders in AMC, they want the company to thrive as well. So, and that's kind of what some of these people talk about in here. Anyhow, what I did like, or what caught my eye, was this long little article here. And I don't want to go into everything, but what caught my eye is this, and I'm going to pronounce this wrong. Archegos Capital Management, right, forced by its bank to sell more than 20 billion worth of shares. They got margin called, everybody. So what happens with margin call is basically when you short your position, when you short a position, you need to cover those positions with either actual shares, or you need to have the capital in your account to cover that if you start to lose money on it. So basically, they started losing money on these shorts, and they got margin called on it, and looks like it cost them quite a bit of money. So $20 billion worth of shares by margin call. So they had to, I guess, give the bank back the money. And when I go to look at Yahoo Finance, this is Monday, March 29th, written by Oscar Williams Grutt, Senior City Correspondent of Yahoo Finance UK. And I'll just read through the entire article, because this is really what I wanted to get into. When I saw this article, I really wanted to talk about this. And it doesn't look like they say anything really about AMC, but we'll find out, because I didn't read through the entire thing just yet. I want to kind of save my thoughts on it as I read it for the first time. So it reads like this. A little-known hedge fund that blew up last week has sent shockwaves through the world of investment banking. Shares in Credit Suisse, or Swiss, as I like to say, and Nomura sunk over 10% on Monday after both warned they face potentially billions in losses linked to hedge fund Archegos. I'm just going to say Archegos, right? Sounds better to me. Capital. Banks that worked with Archegos and lent it money to buy shares were scrambling to offload Archegos investments after a handful of risky bets made by the hedge fund went bad. Sounds a lot like this AMC stuff, right? The rush to exit these positions hit public share prices, leaving banks with huge losses. As Trump would say, huge. They're having huge losses. Sorry, that's like the worst impression. But you guys, I'm sure you can just hear it, right? Hedge funds typically borrow money from banks to invest, a process known as margin trading. This allows funds to leverage up the cash they hold and increase their positions, potentially earning far greater returns if their bets come true or come good. However, it also means hedge funds can theoretically lose more money than they hold in client funds. If trades made on margin turn sour, banks will ask a client to put up more money as collateral to limit potential losses. This process is known as a margin call. So I hope I explained that a little bit, or up to par, as they do in this article here. So essentially, hedge funds can borrow money from banks, or in my case, I am trading on a margin account. I just recently got into that. I was a little worried about doing that, but I try to trade on one-to-one margin account, meaning that if I buy something for $100, a position for $100, I have $100 in my account. So I'm not really using their money. I'm not borrowing their money to trade, because they can, if something happens here, and it's not so much if you're just owning shares outright. It's more if I'm making puts or some calls, right? Some put options, and I'm selling, and then those just start to tank, and then like I'm losing more money. Or let's say I place a put call for $100, the share price goes up to $1,000. Well, now like I need to pay that money, that $1,000, right? They're going to margin call me, and what they could do is they could take they can make me sell my positions in other shares, right? They can make me sell my shares in other positions. Anyhow. Archegos faced margin calls on its positions last week, but failed to provide extra cash. As a result, banks began selling off stocks held on the hedge fund's behalf, right? So that's what I was just referring to, is that they can sell off your positions, for you. I mean, they can just do it, right? If you're trading on margin. A fire sale, known in the city as liquidating positions, which all seems like it's one word now that I say it into. The business press reported on Friday that Goldman Sachs and Morgan Stanley were selling huge chunks of shares in business, including Viacom. Sorry, I want to get that off. I do not like having that. I might have to go back and blur it out. The business press reported on Friday that Goldman Sachs and Morgan Stanley were selling huge chunks of shares in businesses, including Viacom, Discovery, and Chinese stocks Baidu. and Tencent Music, TME. The block sales are estimated to be worth around 20 billion, according to the Financial Times. So I really wonder what was going on here. They got margin call, but for what reason? I'm really hoping they tell us, and I'm really hoping that they say it was AMC here. But it looks like they made them sell off. I'll just read that one more time so we kind of all understand here. The business press reported on Friday that Goldman Sachs and Morgan Stanley were selling huge chunks of shares in businesses, including Viacom, Discovery, Chinese stocks, Baidu, and Tencent Music. The block sales are limited. Okay, so 20 billion, right? Things started to go wrong for Archegos when shares of companies such as Viacom started to slide mid last week, said Michael Brown, a senior market analyst at Caxton Business. It was at this point that margins were called and couldn't be provided, hence the block sale seen Friday. A fire sale can have a negative impact on stock prices, and shares in both Viacom and Discovery sunk 27% on Friday. So it seems like they should have wrote as Viacom and Discovery sunk 20%. Anyhow. Banks therefore risk making less back from the sales than they lent to clients to fund the investments. Credit Suisse on Monday warned that it was facing highly significant losses linked to Archegos that could be material to our first quarter results. The Swiss lender didn't name Archegos, but said a significant U.S.-based hedge fund defaulted on margin calls made last week by Credit Suisse and certain other banks. Credit Suisse said that it is in the process of selling shares held by Archegos. The bank said it was premature to estimate how much it will likely lose from the crisis. So the bank is losing money, right? And this is what we're saying is it may happen with some of these other hedge funds, Melvin Capital, Citadel, and a few of these others. Is that they're shorting the position. The price of the stock, as us apes keep holding it, keeps driving the price up, right? Supply and demand. There's not enough supply because the demand is so great, and us apes are diamond handing this thing. And so more people want to get in. FOMO, their fear of missing out. When they see this price going up, more people, retail investors, are buying in. These guys are shorting this thing. It's just going up. And they're going to get royally screwed on this thing, and they'll get margin called. And so that's why they enacted the DTCC rule a few weeks ago. And I think you're going to see this is very, very good news, because it means that we're on the edge. And I'm hoping that they say what was going on into this hedge fund. But as we probably know, they're not going to tell us what was going on here. But I can only imagine that it was some kind of shorting of some point where the stock price went up. Let's continue on here. The Swiss lender didn't name Archegos, but said a significant U.S. Okay, we already read that. Blah, blah, blah. We intend to provide an update on this matter in due course, said Credit Suisse. Share sunk 13.4% in Zurich, right? So Japanese bank Nomura said it too was facing a significant loss arising from transactions with a U.S. client. The bank said it was currently evaluating the extent of the possible loss, but said it was trying to claw back $2 billion from Archegos. Shares in Nomura sunk over 16% in Tokyo, and what a massive drop here. Deutsche Bank reportedly also did business with Archegos. A source at the bank said its exposure was fraction of that of the other lenders. A spokesperson declined to comment. Shares were 3.2% lower in Frankfurt. Traders and investors were scrambling to find or try to figure out how far Archegos exposure went and how bad the damage may be elsewhere. The iShares Euro Stocks Bank 30 fell 1.5% in early trade. Market sources estimate the fund was worth 10 to 15 billion and running 5 times leverage. Oh, God. Which would said it's holding at approximately 50 to 70 billion, said Ben Onatibia. Okay, sorry, Ben. A senior strategist at Vanda Research. Goldman and Morgan Stanley, which were behind Friday's block shares, have yet to publicly comment on the matter. Both have been contacted for comment. Shares of Goldman Sachs were down 1.9 in pre-market New York, while Morgan Stanley was down 3%. Archegos is one of a number of so-called Tiger Cub funds, hedge funds set up by former employees of legendary U.S. hedge fund Tiger Management. See, when I read that, I was like, oh shit, Tiger Woods has his own hedge fund? I did not know that. It was set up by Bill Huang, a Tiger veteran who was convicted of insider trading by the SEC in 2012. Oh, it just gets better and better. Archegos is Huang's family office. I'm just going to say Huang's family office. meaning it manages his money and does not accept outside capital. The fund specializes in public equities, primarily in the United States, China, Japan, and Korea, and takes a multi-year approach to investing, according to LinkedIn. The fund takes its name from the Greek word for author or captain. Archegos' public website was offline on Monday morning. Wow, they took it down, huh? One would assume that, judging by the size of positions sold, the game is up for Archegos, Brown said. He said it was unlikely that Archegos would pose a systemic risk to the financial system. Neil Wilson, chief market analyst at markets.com, said the hedge fund appears to have been too concentrated in a number of risky stocks. Well, I wonder what those could be. A hedge fund blowup is relatively unusual, and Archegos' undoing has raised concerns that other funds could find themselves in similar positions. I'm sorry, guys. I'm like having trouble concentrating on this because I'm kind of like getting giddy inside because I can see that others will soon follow, and it's because of their piss poor managing of their fund by shorting these shares that they're trying to bankrupt by doing shady stuff and trying to push us retail investor out and trying to bankrupt some of these companies. And you know what? They, in the very end, they're going to get what they deserve. Alex Harvey, a portfolio manager at Momentum, said, "We tend to find out after the event that other funds get caught up in sometimes hedge funds may be crowded into similar trades." Well, I think that there's a lot of them shorting AMC and GME and a bunch of other stocks, right? All together. Wilson said increased market volatility in particular stocks raised questions about whether these sort of leverage blowups could become more common. When we look at this and think about the GameStop saga and the decline in Tesla as two examples, what we're seeing are more and more pockets of very unusual trading activity in some stocks, he said. You worry that this sort of frothy trading activity in turn creates pockets of distress among investors and banks that leads to larger unwinds and losses for financials. Here's a nice little video about short selling here that I would play, but it's probably copywritten. Basically, you guys can see here's the hedge fund trying to short, and this is the selling price. He's thinking it's going to go down. However, the price starts to go up. He starts taking losses on profit. He starts to short it even more to cover, and then it starts to go up even more, and then he's screwed twice. So you guys kind of get the gist here. Sorry, that was a little choppy reading. I feel like I'm super close to the screen. It's 32-inch monitor. However, you guys kind of get the point here, right? So Archegos, and that's what we're going to call this hedge fund here, pretty much they're done. They got margin called. They had a fire sale where the banks came in, started selling off their positions to get their money back, and that's what will happen, when you get margin called. So that's why, a lot of us on YouTube and a lot of people, and I haven't said it yet, I'm not a financial advisor. I do this for pure entertainment, and I'm learning along the way. So you guys are just following my journey to the finance world and day trading and swing trading and long-term investing and all this kind of stuff. And, I'm learning, and I wanted you guys to be along for the journey. So anyhow, I'm not a financial advisor, as you can tell, and I'm definitely not a book reader in the out loud sense. What would you call that person? Person who speaks like out loud. If anybody knows, shoot me a comment down below so I might just have to look it up in the dictionary. Anyhow, back on topic here. So, excuse me. Archegos is screwed, and a lot of other funds may soon follow. Banks will come in and say, no, you guys are losing too much money. You keep shorting this. You borrow this money, and it's time to pay it back. And you're going to default, and they're going to fire sell some of these other companies. If there is a fire sale, I don't exactly know what that means for AMC or GME, truthfully. And if somebody knows, please leave a comment down in the video. Send me a message on Facebook or Twitter. And matter of fact, let me get off of this stuff because I guarantee I'm going to have to go and block out a bunch of this stuff here. So let me just get back to the screen. As I was, if you guys know what will happen during a fire sale, when, let's say, Citadel or Melvin Cap or one of these other hedge funds get margin called, what do you guys think will happen? I mean, I'm assuming they're gonna sell positions that they hold, but not really too sure on what that means. For us AMC diamond handlers. Will that drive the price up to some degree. I really am pretty curious, and it's some information I'm going to be looking for as what happens when a hedge fund gets margin called, and when they do get margin called, do they have to buy the shares back? What if they don't buy the shares back? Do they're going to get liquidated, right? The bank's going to come in and they're going to take, they're going to sell off their shares and get that money back. Would they be that hard-headed as to not start to try to cover these positions? I'm sure to some extent that they will try to cover, but maybe we can go back and look at some of see, the thing is, if we knew what kind of positions they held in Archegos, we could probably understand a little bit better as to what we could look forward to seeing. And golly, oh, sorry, you guys can't even see that. I just keep seeing these videos pop up. Maybe we could see, what we have in store for us if one of these hedge funds that's shorting AMC or GME goes belly up and gets margin called. Anyhow, I wanted to keep this short and sweet. Hope you guys found the video interesting. Sorry for my terrible reading. I'm hoping that I'm getting better. I normally don't have to read out loud, so it's kind of odd to do it and then by yourself, right? So anyhow, thank you guys for watching the video. I will see you guys tomorrow at opening bell. Have a good evening. Good luck. Diamond hand to the moon, apes. And peace out.
Mic off.